Dear friends, welcome to weekly view on markets. This week market overall consolidated. The markets went up in the first part of the week, but on Thursday and Friday they lost almost all the gains, and for the full week the markets ended up flat. US inflation data was declared on Wednesday. The inflation figures came at 3.5%, which was higher than the expected figure. This has dashed the hope of early interest rate cut in US as the inflation rates have come at higher, and all global markets sold off due to this, and Indian markets also followed the suit. Indian markets corrected despite good inflation and IIP numbers for the Indian economy, but DIIs have used this correction to buy. They have bought more than 12,000 crores in equity in this week. This shows the confidence of domestic institutional investors in the Indian markets and economy. So investors should use the corrections to buy good quality stocks. At present, large cap stocks valuation looks more attractive than the mid cap and small cap valuation. So also investors should keep a longer time frame for their investments as markets are already trading at record high valuations. Let us look at performance of indices. Nifty has closed at 22,519, just up by 6 points for the week. Bank Nifty has closed at 48,564, that is up by 72 points. Mid-cap index has closed at 50,067, up by 44 points. Small cap index has gone up by 141 points and closed at 16,496. India VIX is steady at around 11.53. So it is good that Nifty has closed about 22,500. Bank Nifty has maintained above 48,000, and mid cap index has maintained level above 50,000, and small cap index has crossed the resistance level of 16,000. This is all good indicators for Indian markets. Now let us look at sectoral performances. Half of the sectors have gone up and half of the sectors have seen corrections or profit booking in this week. Neither there was a big up move nor there was a major correction. So this is why this is a typical consolidation week. Metals have gone up by 2.90%. Realty stocks have gone up by 1.56%. Oil and gas stocks are up by 1.25%. Auto index is up by 1.16%. Commodities around 1%. Pharma stocks corrected by 1.94%. PSU Bank index corrected by 1.47%. Healthcare, information technology, media, FMCG all corrected around 0.4 to 0.6%. Consumer durables corrected around 0.19%. Now let us look at technical charts. This is a chart of Nifty index. As we can see, Nifty index is going up in a uptrending channel. This channel is called a trending channel. The lower line is the support line and the upper line is the resistance line. As Nifty touch this upper line, we can see some kind of profit booking and correction has come. As long as Nifty remains at around 22,500 levels, there is nothing to worry, and my technical view on Nifty will be bullish. This is the chart of Nifty Midcap Index. Here also we can see after crossing the major resistance level of around 49,800, we have seen a up move in the Nifty Midcap Index. And as long as this Midcap Index maintains above this line which I have drawn, there is nothing to worry. It is a buy on dip market. This is the chart of Nifty Small Cap Index. Here also my view is similar to the mid cap index chart. The small cap index chart has taken out the major resistance. Here this line we can see, and as long as it maintains above this level, we'll see higher levels coming in for Nifty mid cap index in the coming weeks. This is the chart of Bank Nifty index. Bank Nifty index has crossed the crucial level of 48,000 and it is maintaining above 48,500. As long as Bank Nifty index maintains above 48,000 level, my view is positive on Bank Nifty index. Any dip is a good buying opportunity. If it slides below 48,500, that is a good buying opportunity for traders. They should buy at around 48,000 to 48,300 level if they get a chance. Then when it reaches at around 49,000, that is the time they should book there. Now let us look at some of the market fundamentals. See why the market corrected majorly on Thursday and Friday. It is because the US inflation data was declared and it has come at much higher level. As inflation is trending higher in US, the chances of interest rate cuts in US will be delayed. So this is the reason we have seen all global markets corrected and accordingly Indian market is also corrected. Integrated industrial production numbers have come at 5.7% growth for the month of February, which is a quite a good uh, growth, and it is indicating that 8 core sectors which represent EIP are growing very well. And along with that, the Indian inflation figure has come below 5%, that is at 4.85%. So lower inflation and good growth in industrial production is very good for the Indian economy. And that is why we have seen, even though there was a sell off based on the global markets, DIIs have invested a lot, more than 12,000 crores. They have used this correction to buy. RBI forex reserves is at record level of 648.5 billion US dollars. This week it has gone up by 2.98 billion. Rupee dollar rate is at 83.41 and dollar index has gone to higher level, that is 106. Why rupee is sliding is mainly because of the global demand for dollars. The dollar index from 102 level has moved to 106 level in last 1 month. That is why we see weakness in Indian rupee. It has to do more with the global factors than the Indian economy. Brent crude price is at $90.21 per barrel. There is fresh conflict, escalation of conflict between Iran and Israel. And if some kind of attacks and war situation develops there, we may see oil prices going higher. This is not good for the Indian economy. Gold prices is at 71,950 for 10 grams 24 carat. So because of the geopolitical uncertainty globally, the gold prices are trending higher. So the elevated gold prices has reduced the demand for gold jewelry in India. Accordingly, we may see the results of companies involved in gold jewelry business may not be that good for this quarter. FIIs have sold 6,527 crore, but DII have used this correction to buy more than 12,000 crore. That is 12,223 crore they have bought in equity in this week. Buying by DII at lower levels is seen in the markets. Every dip, they are pumping more money into equities. This shows the confidence of domestic institutional investors in the Indian markets and in the Indian economy. Q4, that is fourth quarter earnings season, has started with TCS results. TCS results were more or less in line with the market's expectation. This week, I think Infosys and some more other companies' results are coming in. We will see stock specific action in the market based on the results of the companies. And we have to keep a watch on geopolitical development. That is a conflict between Iran and Israel. Apart from Israel and Hamas, now a new front is being opened. So this conflict escalates. That will lead to higher oil prices, greater demand for dollars globally. That is not good for the global economy and for the markets. So any dip due to this development will be a good buying opportunity for Indian investors. They should look at good quality stocks, have a larger time frame for investment. And mutual fund investors should continue their SIP investment, should not worry about this short-term volatility and other factors. So this is all for this week. If you like my video, please subscribe to my channel, share with your friends. You can ask your questions. We'll meet again next week. Thank you.